Antony Waste is a stock in focus. The company's the stock is of course active, but essentially the results that have come out have seen a 13% revenue growth and a 200 basis points margin expansion, which on that base is pretty impressive. Lots of things to talk to the management about. Mr. NG Iyer, the CFO of the company, joins in right now to put the quarter, the half year into perspective maybe, and tell us about the quarters ahead. Mr. Iyer, good having you. Congratulations on what seemed to be a decent quarter. Did it shape up in line with what you had estimated? A 13% revenue growth?
Yes, good afternoon, Neeraj. So the numbers are very much in line with what the management expected, because these are based on the contracts that the company has already bagged and won and is executing. So the ramp up of tonnage is in line with the expectations, the kind of cities that we work in. The tonnage growth is moving up in line with what the underlying growth of the population and the fact that we are during the monsoon and just out of the monsoon time. So the tonnage is always better at this point of time. So that we benefited, and also the new contracts kicked in, which gives an YOY base for us.
Sorry, are you saying that the tonnage improves in the October, November, December quarter, or is it high in the monsoon quarter?
So it normally improves from June, July onwards till November end, because that is when the monsoon and the festivals come in. So, I mean, garbage is a factor of the generation from the residential and the commercial units. So we have normally seen that tonnage is improved during the monsoons because of the moisture in the system, and also the festivals and everything do kick in. So that's a seasonality. I would say, like, if we were to look at it, 100% of the tonnage, 55% would be recorded anywhere between June till October, November, and the balance 45% comes into the balance period.
Okay. I would have thought that the growth will come in not just from the underlying population growth, but also by newer areas that you might win within a particular metro or a city that you might be operating in.
So what happens with Antony is, when you get a contract, you get the contract for the entire city or a part of the city. So the incremental growth doesn't normally happen during the period of time. So you, for example, I'm working in Navi Mumbai, the entire city of Navi Mumbai is with me. So it's not that during a month I'm doing only parts of Navi Mumbai and not the other parts. So the entire city works with me, so I get the benefit. What adds to us is when we bag a new contract and that revenue comes in. So that is an additional revenue on top of which we get. So this quarter we saw revenue from our Nasi contract coming in. So that was a positive for us. And also the waste processing at our Kanjur site was higher than what it was last year. We processed around 6,300 tons of waste a day, which is approximately 90% of the entire waste of Bombay is being processed at our site.
Yeah, and I'll come to that as well. But okay, let me just get the growth into perspective first before I go to margins and the newer avenues. So are there any new contracts that you won in the quarter gone by? Is there something on the anvil in the next 2 quarters?
Yeah, so we had bagged 3 contracts. There were 2 power stripping contracts, one in Pimpri Chinchwad, the one in Nagpur, and we recently bagged the collection and transportation contract in Panvel Municipal Corporation. So these are the 3 contracts whose revenue will start coming in the current and the next quarter onwards. That is from Q3 end and Q4 onwards. So those are the 3 contracts that we have. Additionally, the waste to energy project, which we had commenced the operation from 2nd of October, the core revenue contribution will start coming in from this time onwards. So that is additional revenue that is going to come from the core revenue point of view. So these are the 4 projects that will have a new increase in revenue, which was absent in the previous year period. So growth comes from your organic growth of your tonnages from your existing contracts, and also from the new areas or cities that we have bid and won.
Okay. So do you expect this? Okay, let's talk about this. Then I'll come to margins. This waste to energy project, I believe you also started selling commercial power. Now, is this a part of the waste to energy project? I presume yes. And where is it that you are in terms of size? What does it contribute to overall Antony Waste's revenues? And is there for example, a target that you have in mind about where does this go to?
So it's a plan. So we already started selling commercial power from 2nd of October onward. So for the first month, we have sold around 2.9 million units, because please remember, this is the first time that the waste to energy power is being built. So there are always teething problems in the beginning. But despite that, since we work with the best of the technology service provider here, which is Hitachi Zosen, So we have not found any major issues here. So we have started. We generated around 2.9 million units. So that revenue will start kicking in, and that translates to approximately around 70% PLF for us. So maybe in a couple of months down, when all the issues are sorted out, maybe by end of December onwards, we will be ramping up our power generation all the way to say 100% PLF or even more, if possible, to 105%. And at that point of time, around 11.8 megawatt of power can be generated and sold to through the green axis. So that is our potential. On annualized steady state of affair, assuming an 80% PLF, just being conservative, it will add approximately around 65 crore revenue to the top line of Antony Group. So on a 800 crore kind of a number, it's around 8 to 9% of incremental revenue that's going to come in.
Okay, and
that's like a 21-year model.
And that, I believe, gets added in FY25 easily, because you will have one whole year of operations.
Comfortably. Yes.
Okay.
Yes.
Now, what looked interesting was the margin expansion of 200 basis points. Is this a sustainable number that you've clocked in? Do you aim to take it higher, and how so?
So the margin expansion is because of two factors. There is a significant operating leverage that sits in the company, because the increase in tonnage doesn't mean I need to have an increase in cost, because the number of trips is almost the same. The load carrying is higher. So there is a decent amount of operating leverage which helps the company when the tonnage improves. Second, more importantly, there has been a bit of escalation which has been overdue for the company for quite some time. So that has been passed through. Despite elected members not being on board, the government has taken a call to kind of pass on the escalation of minimum wages and the fuel. So during the first quarter, we got some bit of escalation passed by one of the corporations. In the second quarter, for the previous year, that is till March 2023, some of the escalation has been cleared. So that has also come and helped us improve the margins. So if you were to take out that contribution of escalation from the system, my core EBITDA margin is around 21.6%, and that is something that is sustainable. 21.6 to 22.5 is something that you can go to the bank with.
Okay. There is just one more question. So sorry, I'm just trying to understand. Do you reckon this is the new normal? I couldn't hear you very distinctly, but do you believe these margins are the new normal for margins?
These margins are, these are the stable core operating margins for the company.
But if the power business becomes 10% of the revenue and maybe even goes higher, does it improve the margins or does it impact the margins negatively?
It will improve the margins from there on, because the power, the waste processing entities normally are higher EBITDA contributors. So they will have a higher margins. Also, additionally, Neeraj, from FY25 onwards, our construction and debris processing project will also be online. So that is a mix of construction and transportation, collection and transportation, and processing. That also has a slightly higher margin. So that will also contribute to the revenue.
And how large could that business be in the first year of operations?
So it's around 650 tons per day and 1,400 rupees per ton. So around 40 odd crores should be coming in, and at least on a steady state of affairs, if not more. And there's a slightly bit of cyclicality involved here, because during monsoon we don't see a significant amount of work happening. So we are expecting the C&D project, as the construction and debris project, processing project, to start anywhere from February onwards, February, March. So forget FY24. For FY25, we'll be seeing that also coming into the top line, and margin also improve from that.
So let me get this straight. Via these two new things, you add about 12% to your FY24 top line in FY25. What is the core business growth that you envisage, Mr. Iyer? And therefore, what's the consolidated growth, let's say in FY25 over FY24, for example?
So FY25 core revenue growth would be at least, if not more, around 18 to 22% for us.
20 to 22%. Sorry, did you say 20 to 22%?
18 to 22. 18 to 22%.
18 to 20%. Okay, so 18 to 20% core business growth, add a layer of 10% to 12% or whatever the number is of this. So that's about between 25 and 30% growth that you envisage in FY25 over FY24.
Yeah, so that is a number that is achievable if that volumes come in the way we anticipated as per the tender condition, and we're able to ramp up the collection in a more efficient manner.
Got it. I have one final question, actually rolled into two. Sorry, do you have any other fundraising plans in the near term in order to execute any of these projects?
So we don't need dilution to happen because our net debt to equity is a pretty healthy 0.4x today. So if I need, if at all I need any fund to be raised, it will be an SPV level, which will be more like a bridge loan to kind of satisfy the equity component. For the first half, the company generated around 92 crores of operating cash flow from operations after working capital. So the cash front, I think the company is pretty stable, and the window of projecting and looking at projects. We don't need to raise funds in anticipation of new projects, right? So when we get contracts, we are easily able to raise debt from the market for a working capital and or your purchase of assets in the market. And our cost of borrowing is around 9.1%. So it's pretty much good for us. We are in a sweet spot, have a decent credit rating of BBB+, and
Sure.
good cash in the system and good operational performance.
Got it. I have one final question, Mr. Iyer. A lot of people talk of how, as the per capita of any country, even in Asia or other emerging markets, has gone up. Amongst the proxies is also organized waste handling. And that, therefore, has a longer tenor of growth. We are going through one of those phases in India, I presume, when we move from 2,000 to maybe 3,000, 4,000 over a period of the next 15, 20 years. What is the long-term growth projection that you have in mind for your company?
So we should be growing at not less than 25% CAGR, and that will be it's not a linear growth. There will be ups and downs because you get a contract and you need to execute it at times. So 25% a CAGR growth is something which is achievable without adding stress to my balance sheet and based on the managerial strength that I have today. So one of the limitations that we normally face is the ability to get at least decent top management and middle management in this industry, because unlike a steel or a cement industry where lateral recruits are possible, this industry is still growing. It's just got a 2-decade-old history. So getting people growing the company in the collection and transportation is always a bit of a struggle. But waste processing is a fantastic opportunity, and that is where Antony Waste is focusing. 70% of India's waste is still unprocessed. So that is a big market, and that is where the technology and availability of manpower is not a problem.
Got it. Got it. Well, Mr. Iyer, we hope you can get more talent and better talent for your company, because you're doing great work, I'm sure. Thank you so much for taking the time out. And to you and everybody in that Antony Waste family, a very happy Diwali and a prosperous New Year.
For you too also. Take care. Bye.
Cheers. Bye-bye. Thank you. And viewers, thanks for tuning into this conversation.
Wishing all the viewers of PQ Prime a very happy Diwali and a wonderful festive season. Have a great year. Thank you.